Chicago time on Monday, the 19th of September 2016. It's a new week. Thanks for joining me. Derivatives trading involves substantial risk of loss that is not suitable for all investors. Past performance is not indicative of future results. As I said last week, I'm not going to go over the news much. The key driver, of course, this week is the FOMC decision on Wednesday. The market's pricing in, according to Bloomberg, about a 20% chance of a change in interest rates this month, and about a 55% chance by the end of the year. Also, you may have noticed a 9-point pop at about 6:30 p.m. Central, 7:30 p.m. Eastern last night, and it appears to me to be attributed to numbers out of China. China August financial data boosts economic confidence. August lending and money supply data were better than expected, indicating the economy has most likely bottomed in an L-shaped recovery. I think that's what drove that. I'm not sure. I asked my news desk for clarification, but I haven't heard back. Let's get into. Oh, and there's an OPEC meeting next week in Algeria where yet again, those participants are expected to figure out how they can tighten supply. But so far, each participant has done the exact opposite of what is necessary to keep prices buoyed. Of course, oil is is much stronger today. Trading at 44.19. Crude oil's up about 1.31%. The flow of capital today is into risk. Seeing the markets across the board stronger this morning, with oil leading the pack, followed by the Euro stocks and the DAX. The only futures that I'm watching that are down are the US dollar index, December futures, and the Euro Bund. The Treasuries, the 10-year note is pretty much flat, and so is the U.S. bond. And then, in addition to the FOMC rate decision and the Algeria meeting, there's fights broke out again in Libya and took that supply off the market, and that's causing a surge in crude oil prices, apparently. As far as what we're expecting in a week, given that it's Monday, today the key release that I'm seeing that remains is the NAHB Housing Market Index. That comes out at 9 o'clock for the U.S. for September, expecting 60.0. The previous is 60.0. We have ECB Speaker Mersch at an investment conference in Munich at noon Central, 1 Eastern. But that's really it for today. Looking at the week, again, since it's Monday, tomorrow we get PPI year on year out of Germany at the Treasury Open in Europe, 1 Central, 2 Eastern. And then at 7:30 Central, 8:30 Eastern, we're getting U.S. housing starts, 1.192 million. Building permits, 1.17 million at the same time. And on Wednesday, we don't have too much of a market driver overnight. We do get crude oil inventories at the usual time, 9:30 Central, 10:30 Eastern. But we get the FOMC rate decision at 1 Central, 2 Eastern on Wednesday. All ears will be pointing in that direction. At 1:30 Central, 2:30 Eastern, we'll get Fed Speaker Yellen and her press conference on that decision. On Thursday, we're looking for 8 a.m. Central FHFA Housing Price Index for July. Seems quite a bit behind. And then at 9 Central, 10 Eastern, we're looking for existing home sales. At the same time, European consumer confidence advanced for September. And then the leading index, the U.S. leading index, expecting zero all at the same time, 9 o'clock Central, 10 Eastern. As far as speakers on Thursday at 8 a.m., we get ECB's Draghi at at the ESRB conference in Frankfurt. So you want to pay attention to that if you are in the Bund, the Euro, and so on, the Eurex products. And then at 8:30 Central, at 9:30 Eastern, we're looking for the Bank of England speaker Cunliffe, also at the same conference. Friday brings 2:30 Central, 3:30 Eastern. Friday brings the German manufacturing PMI, services PMI, all prelim. Also for Europe, same time, a half hour later at 4 Eastern, 3 Central, and then the U.S. at 8:45 Central, 9:45 Eastern. We get manufacturing PMI prelim for September, expecting 52. And then we have Fed speakers Harker, Mester, and Lockhart on a panel at the Philly Fed conference at 11 o'clock Central, 12 Eastern. That's how the week shapes up. So the star of the show here is going to be the FOMC on Wednesday, with with something peppered in pretty much every day of the week. But there isn't a huge cluster of data on any given day. So that's how the week's shaping up. Let's quickly move over to our um, review of Friday's Trader Bite. Friday, uh, the expectation is for a continuation of some of the volatility that we've seen. Remember, Friday was quad witching and was actually very, very quiet. The At the time of the trader bite, the market was trading 21.34. It actually opened at about 21.31. The expectation is for a sideways trade like you see here, but eventually the expectation is for the market to test down and break higher towards at least 2140, 2140.50, and potentially take off from there. The key price in this area is right here at about 44.5. I'll talk about that a little bit more when we look at the monthly profile. This did not work out. Essentially, what we got on Friday is this without the break. So there was none of that, and so it definitely was a quiet day. The secondary hypothesis, which was open in range in chop, test higher, and then look to sell lower down to 21.18 and a quarter as the key idea. Remember, we had selling, buying, selling, a little bit of buying and selling in the afternoon, and then buying again. So the expectation was potentially for selling again. We're totally in balance in this range, and that did not happen at all. Instead, Instead, what happened was this. It opened at 21.31. Remember, at the trader bite, it was trading up here a little bit. It opened at 21.31. We had a nice wide swing on the open, um, and then it traded sideways, broke lower, and then tested the other side by 2 ticks. It took out the opening swing high by 2 ticks, came back to the middle, and it was just completely balanced. You can see these big rotations that don't end up going anywhere. So with this, in fact, Friday looked a heck of a lot like what we've had July, August. Just a lot of pressure, and it looks like the trade was to trade the pullback and the push, and then it flips and goes exactly in the opposite direction. Overall, the profile on Friday completely Gaussian, completely balanced. The volume is tough to consider because it is an expiration day. But overall, the market didn't do anything but balance on Friday. Note though that we had a one tick failed auction right here. It's just a classic failed auction, and from on the low on the IB low, and then we extended the IB high uh, as well. So this was a neutral day that closed near its highs. And again, as always, uh, with the neutral day closing near its highs, the expectation is for at least a push through that day's high. Of course, those expectations are much stronger if the point of control is up near that high. In the overnight session, so that gives us Friday, a completely balanced day, a very beautiful looking balanced profile. Okay, tapers on the top and bottom. When we look at the action ensuing Friday on the reopen of Thursday, of Sunday, we get an open. The market chops around for a little bit for about an hour and a half, and then we get this strong pop right here from 2132 and a quarter to 2141, basically 9 points. And then the market simply continued. So this was an impulsive move here. This is an impulsive bar. It looks news based. It all happened within that bar. And then we're looking for the continuation. And then eventually we're looking for a return to the scene of the crime. The scene of the crime in this case is 2132.50. But what the overnight session has done is it's hung in there. It has not sold off. It's holding in that in the P shape. This is a P shape profile here. So this is a short covering, and it's held on to these prices. Note the overnight high is 2144 and a quarter, with the last high in this area was on Thursday at 2144.50. This is a key price, and I'll just speak for a moment as to why that is a key price. If we look at the monthly profile, so here's your July, which after the 8th, after the 12th, ended up being a very, so if you eliminate the tail, of course it is part of July, but if you eliminate the tail, there was a ton of compression in July. August simply opened at the close of July, tested a little bit lower within that compression zone, and pushed up and created its own really tight month. And then what we've had in September is we started out on top. We've put in a point of control up here, right there, that is in line with the point of control of August. That's natural. And then we broke down on the 9th of September, and then we had basically our lower low day the following day, which reversed that 45.5 point day up on the 10th. And we have stayed down here and built some balance down here, and we have actually shifted the point of control down and shifted value down to the lower end of the range. The thing that separates the lower and the higher end of the range is 2144, 44 and a half. So if we look at September here, as we zoom into September, this is your entire month of September right here again. So we have an upper distribution. We have an LVN zone essentially from the breakdown day. We have a huge gap zone above. But if you look at right here, right there at 2144 and a half, that is the key low volume node. And in my opinion, and that's the high on Thursday, and it's the high overnight in the overnight session today. Generally, what I'm looking for is what is it going to take to move from this lower distribution to break through and get into the upper distribution, and that's the price. So I'm watching carefully what it does with this level. The expectation will be covered here in a second, but overall this creates an opportunity for a well-defined risk-reward trade for us. Here's the weekly. There's the breakdown on the 9th. There's the pushback. The yellow boxes is the pushback of the 10th. And then essentially from there, we've traded down below with Thursday and Friday trading a little bit higher. Thursday's all the green boxes right there. These are all Thursday boxes. One interesting thing to note. Yes, we do have this big gap zone above, and that is an unauctioned zone. Even though it's in the balance of August and July, it's still an open gap. Uh, what what's important to notice is essentially all of last week traded inside of the range that was put in by the by Monday. So the entire week last week, all we did is trade inside of Monday's 45.5 point range. So if we look at what we did Tuesday, Wednesday, Thursday, and Friday, with Friday being this little doji looking bar, we've basically just traded the heck out of Monday. So there's a lot of what this is telling us is even though the market took back the sell-off day from 2 Fridays ago, on Monday, the market still is hesitating to hold on to these higher prices and has continued to trade the lower end of the drop-off range and remaining below that 44 and a half. It is the market's tentative versus before, where any sell-off would bring in buyers and then we would continue higher. So that's how things are shaping up. Looking at the 10-year note real quick, completely sideways. It has sold off a little bit, pushing yields just slightly higher. But over the last day or so, it is making its way back, and it's coming back into its former prior profile. If we look at a clean chart, you can see that it peaked off, pulled back, and it's been trading sideways with some really interesting intraday moves, some really long bars, stretch bars, which is unusual for this product um, over the since January, February. So it's slowly pulling back into this balance zone after the gap down. It closed its gap and is trading completely sideways with an upward skew most recently. As far as what's expected for today, let's include Friday's action, and you can see how Friday's action fills in the middle of the profile right here. It just fills this in, and we're looking for that point of control shift up. And it just did a good job of shifting. See the point of control suddenly shifting up. It did a good job of shifting balance to the middle of the range. However, this profile does look like it's bottom heavy, and a bottom heavy profile is either going to provide support in this in the point of control area, a lot of fighting in the point of control area. More likely than not, you would see a profile that is bottom heavy extend down and become a little more balanced before the market moves away. The way this shaped up last week, we had basically multiple lows here. We had the low of 21.1050, and then pretty close by lows. The next day we went to 21.12 quarter. The day after that to 21.13 even. There are multiple bottoms in this area. The market has tested and retested this area over and over, creating almost like a ledge type of shape against the low volume node between 21.12, 13, and 21.05. My expectation last week was for us to really push lower and start tackling that 2100 century figure before the expiration. That did not happen at all. Another prediction that just didn't work out. It's just the nature of the beast. Here we are right now. We're trading at 21.39. We have a point of control above us. The expectation this morning is for responsive selling to pull us back into the prior day's range, into Friday's range. I expect it to base, potentially even leave a gap zone, and then rotate up. I expect it to take out the 21.4450 pullback and aim for 21.52 being the key target today. I'm looking for it to reach that upper distribution at some point today. That's the primary trade idea. The secondary trade idea, and as always, as I've talked about over the last few months in this chop, I'm always looking for which side gets tested first. Again, we are opening out of range of the prior day, so the the auction is a little bit is off balance. The overnight inventory is higher. However, we're opening right against the point of control of Thursday. My expectation is on the secondary hypothesis is fairly quiet open, test higher, and look to move down potentially to the valid value area high, and then move back towards the middle and hang out here to build more volume, more compression for the next move, which is likely to be higher. Okay, that is the secondary hypothesis. I'm not looking for it to fall back through. It's had a hard time falling back through. It's either it's more likely to push higher, which was hypothesis one, or test lower to clean this gap up and then trade sideways. Right now, it seems like everybody's tentative for that FOMC announcement. Okay, so those are your key trade ideas for the day. Thanks for listening in. Hopefully, you've had a chance to create your plan for the week and set your goals for the week, and you're moving towards consistency on a daily basis. If you have any questions, reach me. You can reach out to me at futurestrader71.com/contact, or of course on Twitter, futurestrader71. Good luck, and I'll catch you tomorrow morning. Take care.